Time now for today's strategy session. U.S. stocks struggled to recover from the S&P 500's biggest sell-off this year on Friday. Still, the benchmark index has gone 36 trading sessions without back-to-back drops of 1%. So will the dip buyers return? That's the big question. Joining us now with more, we've got Michael Reinking, who is the New York Stock Exchange Senior Market Strategist. Great to have you back here in studio with us. I was reading your note at the end of last week and talking about some of the flashing warning signs. And I believe you were looking at the S&P 400 mid-cap. Within that, looking at some of the consumer staples as well.
Yes.
Where are there still flashing warning signs that you're tracking?
Yeah, so I mean, over the last couple of weeks, while the S&P 500 was making these marginal new all-time highs, you continued to see the small and mid-cap indices kind of trading pretty poorly. They couldn't actually break above their 50-day moving averages, right? And then one of the things that I like to watch, kind of at these sort of turning points, is the performance of staples versus discretionary, something that Jared was just kind of talking about, right? And you started to see over the last couple of weeks, you started to see staples start to outperform. That actually really accelerated at the end of last week, and that's despite the fact that you had Walmart trade down 10%, and that's the biggest component within kind of the staple sector, right? So you've seen kind of this flight to safety. You've seen defensive sectors have really been outperforming. You had the S&P 500 was down almost 2% last week, but yet you had kind of the split between kind of sectors under the surface, right? You had kind of all those defensive sectors that were kind of really outperforming.
Do you see that at all changing or reversing, just depending upon what we get from NVIDIA tomorrow?
It's hard to put it kind of completely on NVIDIA because I think one of the things that, I highlighted that I was watching the mid-cap indices, right? And the mid-cap index is sitting right at its 200-day moving average right now, right? And we've reversed all of those kind of election, kind of all those election gains. I think part of what the market's dealing with a couple different things here, right? We're dealing with a growth scare, as we've seen a lot of the kind of survey data, right, has come in pretty negative, right? We're also seeing negative earnings revisions, right? So we've had a very solid quarter, kind of from an earnings perspective. But if you look at kind of the year, the earnings estimates for the year, right, for the mid-cap index, they're down about kind of about $10. Right, from kind of 205 to the low 190s, right, over since the end of Q3. Right, so NVIDIA could help to kind of put a bid back in that Mag 7 and take out some of the concern that we've seen in the unwind of kind of this AI infrastructure trade. If they can kind of convince people that there is still this kind of burgeoning demand, and it could kind of help the S&P 500. But I think for that broadening story to happen, right, we're going to need to kind of work through some of the other issues.
Don't we typically hear companies adjust their earnings forecasts for the year early on in this first reporting period? Why is this time atypical of what we've seen in the past?
Yeah, so I don't think it's necessarily atypical per se. I think that there were very high expectations coming in, right? So we were looking at kind of not only the S&P 500 to show 15% earnings growth rates, but we were also looking at kind of those small and mid-cap indices to show similar growth rates. Those have already been revised down to under 10%, right? And so I think part of what's happening, and this was something we talked about in our earnings preview, is that we would have a solid quarter, but just given the amount of uncertainty, right, that we have from a policy perspective and just an economic perspective, right, management teams are going to be kind of cautious, right? And so you've seen some caution built into those kind of earnings estimates through the back half of the year.
Michael, when it comes to some of that risk-off sentiment, take a look at, even just, for example, what's happening in crypto this week. Is there more of a read-through on that? Obviously, some of that being headline-driven with hacks and everything, but beyond that, is that a signal of something a bit larger here that's at play?
I mean, I think you've had this like very crowded positioning, right? So you've seen kind of the retail crowd, and people have just kind of been moving into these momentum assets, and momentum unwinds happen very sharply and aggressively. I don't know that it necessarily kind of signals anything kind of larger outside of a reset, which in theory, in the longer run, can actually be positive. I mean, it's interesting, kind of to go back to Walmart for a second. Like Walmart was up over 50% from the end of Q2 heading into earnings last week. Walmart had become almost a momentum stock in and of itself, right? Where it was this kind of place to kind of move within the market. And you saw those, the numbers were pretty solid from a quarterly perspective. Their commentary was pretty solid. The guidance was a little bit light. I think there was some caution built into that as well, right? But you saw the stock get hit, by 10%, call it, right? And that was kind of this kind of momentum unwind, and it's just expectations heading in.
We've made it this entire conversation, and we haven't said the Fed or FOMC. What does that tell you about the prioritization in the minds of the market right now?
Right. Well, I will say that the move that we're seeing in interest rates right now is concerning. For me, right? I mean, it seems like just yesterday that we were talking about the move higher in Treasury yields, like it was all but less than a month ago when you had the 10-year was at about 4.8. Right, we've now come in about 50 basis points, and everybody was worried about term premia and inflation concerns. Now we're seeing kind of those growth concerns kind of start to bubble back up. I would caution, I think, what we're seeing in terms of those growth concerns, they're all coming from the survey data, right? And if you think back over the last couple of years, the survey data also told us that we were going into a recession, right? Multiple times, right? So that survey data has been negative as things were positive. We're seeing kind of a turn here and some uncertainty. I think that's kind of an expression of uncertainty. But until we start to see the economic data turn, that hard data start to turn, right? I don't necessarily, I wouldn't put too much weight into that survey data.
So you're not too worried then, I guess, about some of the weakness that we have seen?
I mean, there's concern, right? I think the key is from here, if we do start to get a bounce and we want to see kind of that broadening, like the broadening hasn't happened as investors have hoped in kind of the small and the mid caps, right? It's happened outside of the U.S., throughout the start of the year with Europe outperforming, kind of pockets of Asia outperforming. When we start, if we can get this bounce, because we're at this key technical level and we've been down for a couple weeks straight, if we can get a bounce, you want to see how we kind of interact with some of those kind of shorter moving averages and see if we can kind of build a base here, kind of for markets to propel higher. I think we have a couple things from Washington that that are kind of top of mind. We have a debt ceiling negotiation. We don't know where Washington policy is. So there is this uncertainty. And we've had kind of the sequencing, which is something we also talked about the last time I was here, right? Thus far, the sequencing has been kind of negative growth, kind of from Washington as opposed to that pro-growth. So if we can kind of move through this piece and then kind of turn the page to some of those more pro-growth policies, that's where we can kind of start to move forward.
All right, Michael, always great to talk to you. Thanks so much.
Thanks for having me.